We have Yat Siu, co-founder and executive chairman of Animoca brand with us today. Thank you for joining us.
Thank you for having me. It's a pleasure.
Please tell us the exciting developments happening at Animoca brand currently.
Yeah, so I mean, a couple of things. One, we announced our go public plans. We're doing a reverse merger with Currency Group, which is a massive listed company, fintech player. It's quite strategic for us. We're super excited. The Nasdaq ticker is CURR, but of course, that closing will take around 9 to 12 months. So that's the initial. We're also doing a joint venture with Standard Chartered and Hong Kong Telecom called Anchor Point that is doing applying for a stablecoin license in Hong Kong. And we have a partnership with Provenance Labs on Mova, which is an order review marketplace. And of course, Animoca Brands itself wants to really present itself as the ultimate levered bet on altcoins in the space to allow a way for traditional investors to have access to the broader crypto market.
Amazing. So, Animoca now means much more than games, NFTs, and metaverse, digital properties, right? So, what does digital property mean to you?
Well, digital property is essentially the ownership of the property that is online and basically digital in nature, right? And up until blockchain, we didn't have a way of doing it. So, for instance, you might have an Instagram account, you might have 1 million followers, or you might have, 10,000 likes or whatever, but that is not your property. It's the property of Facebook, and they decide what to do with it, and you can't monetize it, and you can't own it. And so, what we're saying with blockchain is that actually you can now own these digital assets. And I guess the granddaddy of digital assets and digital property is Bitcoin, right? If you own a Bitcoin, it is truly your Bitcoin. You don't need a bank, you don't need custody, you can own it as yours, right? And of course, you can extend it to everything else. Think about everything you do digitally online right now. When you're playing a game, you have a skin, an asset, or an item. Is it yours? It's not yours. But the blockchain, if it's tokenized as an NFT, it could be yours. But the foundation of digital property rights isn't the fact that you can own an item per se. It's the foundation of capitalism. Because now that I can own something, I can now have rights in it, which means I have the ability to monetize it, to do financial services, to do something with it, and essentially lays the foundation of capitalism. And that's what's exciting for us. And that's where we think the future is going to go, right? And so with Animoca Brands, we have 628 plus portfolio companies. Each of them have a mission to essentially advance the future of digital property. And that means that it becomes financial in nature. It's not just gaming, it's DeFi, it's AI, right? And just quickly on the concept of digital property, what is the digital property AI agents are going to be using? It's going to be tokens. It's going to be blockchain-related assets.
So, you are pushing Animoca towards a public market listing soon. So, how do you communicate the value of Web3 NFT to the traditional market investors who aren't crypto native?
Well, the very simple thing that we explain to people is that obviously Web3 and crypto is the future because people are using it. But basically, why would you invest in Animoca Brands? Because we're access to the altcoin space. What is altcoins? It's a utility. People joining crypto today because of altcoins. They're not joining it because of Bitcoin. Bitcoin's important. It's a reserve asset, but it's like gold, right? So gold today is $27 trillion. Stock market is $128 trillion. So, Google, Facebook, and, Apple are never going to be larger than gold. Collectively, they are larger. And that's what we think altcoins will be as well. And so if you believe in crypto and if you believe in blockchain, then that means it's not enough to have Bitcoin. You need to have Bitcoin, probably your Ethereum, your Solana, and then you have to have the whole rest of the market, which is 30 to 35%, which is altcoins. How do you do it? Well, you can buy some altcoins yourself, but good luck. There's millions of them. So maybe your audience might buy directly, but most traditional investors have no idea how to do this. And that's where we come. As Animoca Brands, we become the vehicle for access into altcoins and the way that they can participate in this growth. And also, we're not a fund. And that's important. Because if you're a fund, you have to basically sort of have a fund cycle. So which means you sell or you basically liquidate the fund after 10 years. Imagine if you invested in Apple or Google, or Facebook or all those companies, in 2000, 2001. And then your fund expired in 10 years. You sell in 2011, 2012. Yeah, you make profit. However, you do not capture all the value. That's the first point. And the second issue is that imagine that you are putting money in the fund and it's an evergreen fund. Well, you have no liquidity because the fund is trapped, right? The money is still sitting there, whereas if it was tokenized, if it was on the stock market, then you can trade it. And that means if you believe or don't believe in it, at least you have the option of liquidity. And that's basically what Animoca Brands would represent.
And what's the one thing that you would like to change in the Web3 space?
Well, I mean, I think there's so many things. Okay, so it's not just one thing. But if there's one thing that I really think is important, what I would love for Web3 to do more is basically we need to be more inclusive, right? We need to sort of allow it, make it easier for people to join the ecosystem.
Yeah.
And money is important. Don't get me wrong. Financial literacy is important. That's a key component. But what we really need to do is educate the benefits for it. And if we talk only about too many people are talking about the short-term gains, about the trading, about the patterns. Yes, it's important, right? These are part of it. However, that's not how you get regular people in, because it's not that they don't necessarily understand it. It doesn't interest them that they're entering the space because of, trading patterns or because of, pure alpha. They want to understand the utility. They want to understand the potential. They understand what it means for them longer term. And if we can get those people in, then we have a much more stable base.
That makes sense. So, according to you, what's the most underestimated opportunity in Web3 right now?
So many. But anyway, look, I mean, without specifically trying to sort of talk too much about our own portfolio, because I can't talk about third parties that I don't know, right? But the two ecosystems that I particularly like a lot, obviously, is Mochaverse, which is digital identity, and Open Campus, which is education. So why do we like Mochaverse? Because at the end of the day, digital identity is perhaps one of the most important things for us. And with digital identity, we solve essentially privacy and reputation at scale, right? And I want to be clear, it's not about anonymity, it's about privacy, right? And the whole world needs that. So the leading sort of digital identity privacy sort of correlated chain we think is going to be Mocha chain. And the second one, of course, with EDU, which I think has even better potential in many ways because of its market cap and so on, is that the EDU ecosystem is tackling student loans. Student loans is a $3 trillion market, right? That is massive, right? And EDU chain does a lot more, but that's one of the big things that they're doing. And if they can solve that, which with companies, investments like Business Finance, they think there's a good chance, then actually that would be a big breakaway success, because then you can also bring hundreds of millions of students into crypto because they get their student loans that way, and services a market that at $3 trillion is roughly 10 to 12 times or more maybe than the total TVL of DeFi today.
Currently, there are approximately 20K developers in Web3 space as per Electric Capital report. So what's your view on why the number is still low as compared to the broader development ecosystem?
Well, so first of all, 20,000 developers. I mean, I think we have to look at sort of the fact that more and more people are going to start vibe coding as well. Yeah. So I actually think that when we think about sort of the developer space, it has to do with complexity. People talked about it back in the days when the gaming industry, well, it didn't grow very fast. I mean, in terms of developers. And then came Unity. And these kind of applications made it very easy to make games easily and fast. And then the gaming development exploded. And I think with crypto, it's kind of similar, right? It's not super straightforward for everyone to code. The tools are a little bit more cumbersome, especially those who used to use things like Solidity and so on. However, when you go to vibe coding, you make it more accessible. Other tools, right? So I expect AI is going to help make that easier, because 20,000 developers is actually not a bad number, but these are people who are quite technical, right? You have to get to that next level of developer, right? If you remember, for those of you old enough to remember, as I would, remember sort of Adobe Flash, right? Yeah, but Adobe Flash was actually a web development tool that allowed everyone to create interactive websites back in the day. And that brought a lot of people into the space. And then they evolved, doing things like CSS and so on. And so same thing basically that we expect that needs to happen in crypto.
The build to exit debate. Some say building with an exit in mind compromise the product, and others say it's just a smart business. So where do you stand for?
So I think when we talk about exit, I think we need to define what that means. So if the exit is a purely financial exit, I do think it compromises the long-term goal. But if the exit is the goal is, we will reach 10 million customers and do this, or we will, help finance $1 billion of student loans or whatever, right? And while that's not the end goal, it's a target that you look at. So I think it's always good to have a KPI and a target. But it's also important to note that that's never the end game, right? So when you say exit, it implies that you're leaving, right? So I think that idea is wrong. And the reason why I think that idea is wrong also, even like when we sold the business to IBM, right, back in 2008, 2009, actually, yes, it was an exit. However, people then were hired and had to work for IBM for a longer period of time. That's not an exit, right? You're still part of it, right? So it is related to an exit. There's a plan, but it's never final that way, right? So, and I think it also gives founders the wrong idea that they're building towards finish, right? And investors need to know what the goal is. So rather than call it exit, it should be maybe the goal or the target because it can be more fluid. Right? And many companies expect to be sold and then they go public. Some people expect to go public, then it gets sold. You just don't know, right? You can't build in with that level of assumed certainty, right? You have to be fluid and the markets are very dynamic.
So, what are the core values you look at in candidates while hiring? And are you currently hiring for any tech or non-tech roles?
I mean, we're hiring all the time. Just go on our website, lots of job opportunities. However, when it comes to sort of what we look for, core values, we look for builders and developers and people who want to deliver basically a sort of, impact with purpose. Right? That's kind of a little bit of our internal code word. So are you building something that is impactful and that has purpose? That's basically what we're hoping to get.
Do you look for degrees or no?
No. I mean, degrees are helpful for some on the recruiting side. And I would say most people probably have a degree, but it's not a qualifying factor. Yeah.
Any insights or piece of advice for Web3 founders?
I mean, look, as a Web3 founder, or as any founder, it doesn't matter if you're Web3 or not, you need to have perseverance and grit. This year was a very tough market, especially for altcoins. People thought that Trump would save crypto, and I think Trump has been 50-50. He's been good on one hand, but really difficult on the other because altcoins have had a difficult time, right? Because of tariffs and everything. We need to understand that we have to continuously be able to sort of fight on and persevere. Longer term, the trajectory is good, but you have to, are you in the industry because you really believe where it's going? And if you're only here to make a quick buck, it's probably hard. But if you're here with a conviction of where the space is going, then I do believe you will succeed in the mid to longer term.
And if the community wants to connect with you, what's the best way to reach out to you?
Probably the best way to reach out is, I'm on LinkedIn, I'm on Instagram, and I'm also on X. Those are probably the best ways to get in touch.
That's all. Thank you.
Thank you so much.
Yeah.
Thank you.